Hey everybody, Congressman Mark Green, and it's Whiteboard Wednesday. We're going to flash back to those econ classes from undergrad and talk a little bit about something that's going on right now. Essentially, China has declared war on the United States dollar. But first, we have to set, what's the situation that's prompted them to seize this opportunity? You've seen in previous Whiteboard Wednesdays, as I've talked about, the trillions of dollars in the Inflation Reduction Act, the infrastructure bill, all these things that Democrats have pushed through that have added trillions of dollars to the economy, all while decreasing the supply of goods in the economy. A poorly managed supply chain, the highest regulations in any president's history, which are a cost of doing business, decreases the overall production of goods in the economy, and of course the assault on oil and gas. We were energy independent, and this president turned the switch off, and now we're dependent on all these other countries. Well, that resulted in massive inflation, both demand side and supply side inflation, which is why it went so fast. The Fed responded with the fastest rate increase, and if you look at last week's Whiteboard Wednesday, I actually showed the real graph of this. Here it's just a whiteboard rendition, but this has been the fastest rate increase in the history of the country. Well, it has decreased inflation down to 6%, but that's still 3 times normal and still having a massive impact on some banks. Now, the failed banks poorly managed their risk. Everybody gets that. You can look at last week's Whiteboard Wednesday to discuss it. But there are still banks that are at risk because of this rapid rate increase. That's the situation we're in. So when the banks failed, what did the Fed do? Well, they started this basically bank handout, bank bailout. I call it quantitative easing, bailout for the banks, which injects more money into the system with a fixed supply of goods, right? So more inflation. So in order to compensate, they increase the interest rates again. But they're basically pushing and pulling against themselves at the same time. If inflation goes up much more, obviously the value of the dollar decreases, all the bad things that happen in the economy, and the banks, or the Fed, doesn't have a lot of room to raise the rates because of the banks. So that's the situation we're in. Well, China sees its chance, and over the past week or so, China does a deal with Brazil to nix the use of the dollar for their trade. The BRICS countries announced the formation of a new currency. Now that's a few days out or months out, but that basically will take away the use of the US dollar in international trade for those countries. The French actually do a deal in the yuan, the Chinese currency for oil. OPEC announces the decreased production of oil by 1 million barrels a day. The Malaysian economy says leadership says there's no reason to rely on the US dollar for trade any longer. Of course, China and Russia are doing their deals around the dollar. Essentially, what you see is this significant decrease in the demand for the US dollar. This is what China wants. They want to take the dollar away as the reserve currency. At the same time, you're getting massive inflation that's due to this increase in oil price from the decrease in production. Let's talk currency a little bit, though. Currency also has a supply and demand curve. And with us putting so many more dollars into the supply, it decreased the price of our dollar, or the value of our dollar, down to, let's say, P2. And then, with all these actions from China, it further moves the demand curve down, taking us to an even lower valuation on the dollar. Well, when there's a lower valuation of the dollar, the demand to invest in dollars goes down. All the while oil is, the production in oil is decreasing, causing massive inflation. And if the value of the dollar goes down, our price for imports goes way up, and we import about 75% of what we do. So that also increases inflation. Well, what can the Fed do? They're already maxed out just about with where our banks are. We're in a terrible situation because of bad management from the administration and Pelosi and Schumer. With all this spending, China sees its opportunity, and they're waging war on the US dollar. that's where we are today. That's Whiteboard Wednesday.